going on, traders? Welcome back to the channel. So in this video, I'm breaking down the exact model I used to anticipate high probability moves in gold before they happen. So this model is built around higher time frame institutional sponsorship, and it's something I apply every single week to frame my buyers and stay one step ahead of the market. But before we dive in, I want to give credit to where it's due. A big shout out to TTrades, the MMXM trader, and of course ICT, because I've learned most of what I know from them, and this content is built on their teachings. So the main focus of this video is institutional sponsorship. So we're going to be talking about what is institutional sponsorship, how to spot it, and how to use it to follow the smart money footprints with confidence. Institutional sponsorship is the visible footprints of smart money on the higher time frame, as it reveals the true directional intent behind price through displacement, imbalance, and liquidity engineering. The institutional sponsorship simply means we are following the smart money, and it's about spotting when the big players are active in the market and using their footprint to anticipate where price is likely to go. We are observing how they move and then aligning with that movement. There are specific signatures that reveal institutional sponsorship, and these are the clues we use to frame our buyers, and they are premium and discount, higher time frame key levels, inducement, a change in state of delivery, and SMT divergence. So now let's break each of these in a simple schematic so you can clearly see how they work together. Then we will jump into the real gold chart, and I'll show you exactly how I use this model to frame the long setup I call this week. Share for free in my Telegram channel. Premium and discount. Price is either expensive in premium or cheap in discount relative to a range. Institutions buy in discount and sell in premium. Every market move plays out within a range. Smart money buys when price is cheap in discount and sells when it's expensive in premium. So before taking any trades, we ask ourselves, is price in a zone where smart money would actually want to do a business? In this bullish schematic, price pulls back into the discount zone, which is where we expect smart money to get active. And that is where we will be looking for a long setup in alignment with higher time frame intent. So higher time frame key levels are old highs, old lows, order block, fair value gaps, volume imbalance, opening gaps, or what some call the balanced price range. Honestly, I just grouped most of them under fair value gap because that's where price tends to react the most. They are also known as internal range liquidities, areas where smart money is likely watching. These are where smart money is either hunting liquidity or building positions. So we mark them, wait patiently, and look for setup to form around them, not away from them. Inducement is the bait smart money uses to trap retail traders. The market creates setups like equal highs, fake breakouts, or obvious support and resistance to lure traders into the wrong side of the move. At higher time frame key level, smart money wants to pair orders, so they first induce buying and selling by tempting longs, triggering breakout shorts, and targeting stop losses from existing positions. This creates liquidity on both sides of the market, which smart money uses to enter or exit positions efficiently. Inducement usually happens just before the real move begins, and spotting it gives us a serious edge in the marketplace. This is where the market shifts gears, what we call the change in state of delivery, or CISD. It's confirmed by a clean body close above the candle or series of candles that ran inside the key level, along with a strong displacement in and out of that level. That's our confirmation that smart money has taken control, and we now look for entries in the new direction. In this case, it's bullish. CISD often works hand in hand with SMT divergence, giving us even more confluence when both line up. SMT is when two similar pairs don't move the same way, like gold and silver, where one make a higher high and the other does not, or one breaks a low and the other holds. That's a clue that smart money is manipulating one of them. We use that to confirm our directional bias, by the way. Now that you understand how each of these concepts works, let's put it all together. I'll show you exactly how I combine them to frame my weekly setup on gold, how I anticipate where smart money is reaching for, and how I align myself with their footprint to catch a high probability moves. So this is good on the daily chart. I always start my analysis from the daily all the way down to my entry time frame. Now let's revert back to the higher time frame institutional sponsorship signatures again. What are we looking for? First, we are looking for premium and discounts. It's basically called a range. Now we have this range from this low to this high. And why is it a range? Because it is a visible footprint of smart money, and this shows the true directional bullish intent behind price, since it has displacement and imbalance. That is smart money's footprint. Second, we are looking for higher time frame key levels. Right here, we have a fair value gap that forms at the discount of this range, and this is where this is the area we want to be looking for a long setup. Now, why this fair value gap and not this one? Well, that's a bit advanced, and I'll cover that in another video. Third, we are looking for inducement. Here is the inducement low. This is where smart money trap retail traders. Right from this low, retail traders enter long positions, and what do we notice? Smart money drives price lower to on their stops into this key level. Right on that move down into the key level, we have breakout traders trying to go short. Smart money then pairs their orders and offset it to the buy side. So this induces both buyers and sellers into the markets to engineer more liquidity. And fourth, we are looking for a change in state of delivery. Right here, we got that after a body close above this down close candle. In this case, it's a single candle. And if you notice, this is the last down close candle that ran into the key level. And lastly, we are looking for SMT divergence. Right here, we got SMT with silver. Although silver is the stronger pair in this scenario, but because gold made a lower low and silver did not get below this low, but I don't trade silver, that's why I stick to gold. And SMT does not always need to be in this exact form. It can be this low to this low or in any other form. It just has to happen within the key level. And we also had SMT at this low, but I decided not to annotate that because I wanted the chart to stay clean. Now, this icon below is what I use to identify swing points, and that's TTrades Fractal Model right there. We will cover that in another video actually. And basically, after the change in state of delivery, any bullish PD array should hold until we trade into our objective. In this case, this range high is my objective. And notice how price retraced back and respected this bullish fair value gap. Also, this other block, and then we got a run into the buy side after that. And actually, this is the long setup I framed this week, right from here up to this inducement high. And I shared all my execution in my free Telegram channel, by the way. If you are interested, feel free to join with the link in the description. Now, let's go into the 4-hour charts and repeat the same process we did on the daily. The same process over and over again. And I'll also do another video that covers how I execute this model on the lower time frame. So make sure to subscribe to the channel and turn on your notification so you don't miss it when it drops. Again, this is the 4-hourly chart. Now look, what do you notice? Well, this is our premium and discount range. Here is our key level sitting in discount of this range, and this is actually a weekly opening gap. This is our inducement low, and this dotted vertical line is the opening of this week price action, and we ran into the key level just at the weekly open. Now, a change in state of delivery would normally be this high right here, but silver had already shifted at this level. We paired that with SMT, so now I can use this as my change in state of delivery. And again, after the change in state, what do we notice? Going into this week, we see bullish PD arrays supporting price into our targets. That is how I framed my setup this week on gold, and that is how I caught 7.3R using this same framework. And feel free to check my Telegram channel to see how I execute every day. And yeah, that will be all. If you found this video helpful, don't forget to like, comment your thoughts, and subscribe to the channel for more educational videos like this. I'll see you in the next one.